so much. We have three great panelists here, Alan Matthew, Peter Johnson, and Kenny Estes. And I'm going to set the timer on my phone so that it reminds me not to finish in the right place. And I'm going to give them a couple of minutes each to please tell us a little bit about who you are, your firm, and what you're doing. But we're tight on time, so a couple of minutes each.
I'll start. Alan Matthew. I traded on the Chicago Board of Trade trading floor for decades. Had a little medical scare thing, and then the exchange electrified, it went computerized, and so after that I decided to invest in startups, and that's what I've been doing.
Hi, Peter Johnson. I'm an investor with Jump Capital, where I've been for the last 5 years. Jump Capital is one of the largest and most active venture capital firms in the middle part of the country. We're mainly a Series A and Series B investor, typically investing $3 to $10 million for our initial investments. We invest across a variety of sectors. I lead our fintech and crypto efforts. And one thing that's unique about us is that we are affiliated with Jump Trading. Jump Trading is a very large trading firm in the traditional markets and is also one of the largest crypto traders in the world.
My name is Kenny Estes. I was a high-frequency trader at Getco, a competitor to Jump back in the day, for about a decade. And now I run a small venture capital fund that invests in financial services startups, companies whose customers are large financial institutions. Similar to Peter, a good number of our LPs are very active traders, as it were, in the crypto space and ICO participants.
Great. To take the temperature of the audience a little bit for interest, how many people are looking to invest in ICOs or have invested in ICOs? Can I just see a show of hands? Okay, so it's not an overwhelming proportion. We're going to try to cover some of the questions around the typical capital markets process of friends and family to angel investing, Series A to an IPO versus the new model that we see, being more of a kind of seed capital and a race to ICO kind of thing. But I just want to start with some of these questions, which is, do you think that ICOs will replace the current venture capital model, and why or why not?
There's pros and cons. Certainly where we are today, I don't think we're where we need to be for the ICO market to replace venture capital. A recurring theme of what we see in generally the cryptocurrency market is the lack of infrastructure. One of the things that private equity investments get you is kind of the court of law and a lot of case law history. So you have a pretty good idea how to protect your assets. I mean, if you look at a term sheet, 99% of the things in there are to protect the investor. Much of that infrastructure and support is absent. Certainly from utility tokens, we're moving more towards security tokens with PPMs on the back end, but even then the doc set and the diligence is generally quite a bit lighter. I think down the road it's possible that it can end that way, but it's going to require some sort of hybrid, some sort of combination between the two industries.
Well, it's a lot of it's gambling. I mean, it's a roulette wheel, and one of the things about having a few extra years on the planet is you start to go, oh, wait a minute, I saw that before. Mm-hmm. You know what I mean? But then, my question is, what's next? I mean, because we're going to see how this progresses, but what is this leading us to eventually? Like when the internet came out, did you know what it was about? Blockchain come out. Do we know what it's about yet? So.
I think one way to think about this is to question what is different between a VC funding round and an ICO. And there is, as Kenny was touching on, there's a couple different things. One is who you're selling to. Are you selling to a venture capitalist, or is it a crowd sale? And then there's the other axis, which you can think about what you're selling. Are you selling equity, which is ownership in a company and governance rights typically, or are you selling private keys that control an entry on a distributed consensus ledger? So you can kind of look at those two axes, and I think that there is and there will continue to be activity in all four of those quadrants. Like the quadrant of let's say a crowd sale and you're selling tokens, private keys effectively. Like that makes sense for if you're building a decentralized application and you have a digital asset that's powering that application. That's certainly not going to be the case for every company. So for those companies, it makes sense. For a lot of other companies, that doesn't make sense. So I think it's a complement to the traditional venture capital model and not a replacement.
Okay. There was a lot of ICOs in 2017. I mean, what do we see the outcome of that yet? So one of the things you mentioned there, Peter, was kind of the token doesn't have a claim per se. Is that consensus? Right? So if I buy a token in an ICO, I don't have a claim on the equity of the company.
One distinction is utility token versus security token.
Okay.
The industry and the regulators have shot a number of warning shots at this point. The last statistic I saw, and I don't know, I didn't really verify it honestly, 82% of ICOs were either frauds or failures, which is a ridiculously large bit, and there's a lot of money being raised, and the regulators are going to have to get involved. If your utility token, you know, Bob's your uncle, like you can just literally raise as much money as you want to, and you don't really have any recourse. There's nothing to you. Security tokens, the only ones the SEC have allowed to go through at this point are Reg D filings, so it's accredited investors. But to your point, a security token, which is a Reg D, does have claims in a liquidity event.
Okay.
Like they actually work into the waterfall.
Can you name any of the?
That would be, just to like be clear on that, like that would have to be in a separate legal document. If you're
No,
right.
it's not in the smart contract.
Like if you're just buying the private keys that control an entry on a ledger, like if you're buying a Bitcoin that gives you no claims on the residual assets of the hypothetical company Bitcoin, one, because there is no company. But yeah, it has to be in a separate legal document that would grant you those rights. Simply buying a token gives you no, rights that you'd have as a typical equity investor.
True.
Yeah.
What are the categories of tokens? Security, utility, what else? Is that it right now?
Those are really the only two.
And how do you distinguish between them?
Whether you registered with the SEC.
Gotcha. Okay. Fair enough.
Yeah.
Along these lines, one of the questions here is, do you think this funding model is here to stay? You want to start us there, Alan?
Yeah, oh, hell yeah. I mean, well, we had this little pre-discussion, and this is why those two guys got off on it, but it's extremely disruptive. It's extremely disruptive, and we'll see how it plays out, but, we had this discussion. It's like, why do the large existing funds, and you know the names of the banks or whatever, but seriously, we're operating based on their rules, right? And so, this guy has a very good investment, and why don't you say?
Okay, so yeah, I was just telling the story. I had invested in the friends and family round of a company, really not through any intelligence, through a favor, and it's just gone crazy, right? It's a big home run. And at one point, they offered to take us out in the last round, and my question was, who would I be selling to? And the answer was Kleiner Perkins, Goldman Sachs, Fidelity, and Union Square. And I was like, why am I selling to them? So we were kind of laughing about it, but there's a balance there, right? It's like in one way, that's a lot of intermediation that end investors don't get access to. But in another way, that's a lot of vetting and a lot of crowdsourcing of information to kind of narrow down the investment field that makes it a bit safer. And so that's what Alan was kind of, he had a very passionate feeling about, get used to it and go for the decentralized model.
Yeah, I think the ICO model, I think it's going to be around. I think that it will, it's been obviously very crazy over the last year and a half. And I think that they'll bring rationality and regulation will come to the market. But it will continue to exist in some form for certain companies.
I would echo that. It will be there. It can streamline depending on how it's put together, a lot of the documentation and a lot of the secondary trading. So once you've raised the money, if your investors want to change hands, it's a lot easier to do in that scenario unless you're like a publicly listed stock. So that's always going to be valuable, that just general liquidity. One thing to your point though is it is pretty crazy right now. I've seen in the last couple of weeks 3 different new valuation models for how to value new ICOs. And I'm pretty fundamentalist when it comes to investing. So anytime you have to invent a new valuation model to support a price, that's probably not the best way to go about it.
Can I just want to add one thing that, something comes out and everybody puts their focus on it. It's the latest, greatest, right? Whatever, most handsomest or prettiest girl in the room thing, right? But the thing is, then something else happens after that. So I think that we're creating more of a utility. Some of it's going to be the sexy stuff, but it's just going to be, this is how things are done. Right? It's just we're using that. It's a new train track, or it's a new sort of it's utility, and then we'll figure out what happens after that. So
That's a tricky story for end investors to invest in, right? Like infrastructure. It's easier to invest in pets.com.
no, it really is.
I'm an embarrassed investor in Internet Capital Group, but I mean, can people really distinguish between the value of this kind of new protocol infrastructure ICOs?
Yeah, I think Peter is a great guy to answer that.
Oh, no, I mean, I think it's very hard to value new tokens, especially. There's a lot of uncertainty. What is the right model? I think that I have my own views. I think that the kind of MV equals PQ type of analysis makes a lot of sense, but it's a totally new area. And I think that most of them, the correct valuation is 0. And then there are going to be, a number of new protocols that really do change the world and are going to be just incredible kind of building blocks for decentralized applications that get built on top of them. And those are going to, create and probably allow people to capture a lot of value.
Right, but I mean, but to an extent, don't you think that maybe we're for people that come out of the traditional capital markets world? Venture capital and stuff is really more like a belief system. I mean, it's, like the valuations and the hopes and dreams are, and it's also more of a very diversified bet. We're going to make, 100 bets and we know 90 of them are going to 0. Is it just that that's just not the culture of you guys? I mean, do you think that maybe other people are comfortable purchasing a basket of ICOs?
It depends on how evangelical. It's a really good question. So if you go to venture capital, right, there is a fair amount of garbage in, garbage out on the model, right? Like, hey, I get numbers from an entrepreneur, like, yeah, I'm probably not going to believe those. So what you do is you heavily discount them. Like, what is the best case scenario? What do we actually think the probability that this is going to happen? And it's going to be a pretty low number. The pricing we're seeing in the market right now with the valuations, the effective valuations these tokens are commanding, the people who are investing are placing an incredibly high probability of these things succeeding. Right. The venture community, like you said, it's pretty standard, but we also know that we have very high failure rate, and I just don't think that ethos has really made it through to retail yet.
So I'd like to add that I have a Technori pitch. So Scott Katoon had Gladwin, who sold to IBM for $1 billion something, CleverSafe. And so he asked him, because I had talked to him, Chris, a couple of times. I'm a photographer, I'm not going to bore you, but every time their data set grew, so the larger their data set grew, the faster their computing power. And I was like, I said I have to go back to school to figure that one out. But Scott asked me, he said, what do you think about blockchain? And here, because they weren't on the blockchain. And they had this, alien technology. And he goes, and so I always love getting quotes from like the big dogs, And he goes, I think I'm not going to quote him, this is per se, but the value and the expectations was far exceeding the actual, wealth, or not the wealth, the underlying asset. Mm-hmm. And I thought, yeah, okay. It's the expectations everybody have about it.
This is not the most enthusiastic ICO panel.
No, it is. I think it is. It's just I think you have to, realize you can be jumping into the, deep end of the pool there.
Right. On the flip side, right, like you mentioned earlier, Alan, this idea of you get access to investments that you never would have had access
Exactly.
to. That really are, popped up by KKR and Goldman Sachs, and all these big groups would have traditionally owned the Facebooks and the everybody else,
and they can throw
incubated
$100 million
them,
of gas on it.
Spotify and all these different examples. They're
Yeah.
incubated and raised, and they have finally delivered at this incredible valuation,
Yeah.
maybe worse than the valuation we're seeing in ICOs.
Yeah.
So there is that kind of decentralized power, though.
Yeah.
Like you get access to things you wouldn't have had access to.
Yeah.
One optimistic thing to your point, and to complement that, the internet, you mentioned pets.com.
Yeah.
Famously, very few people made money investing in the internet. And if you took the really glib extension of that and take the most apologetic stance on blockchain and say that this is going to replace the internet, you could probably guess that the same thing is going to happen. One thing that is very different in blockchain is in the internet scenario, you had no way to invest in HTML or PHP or the server. Like there was really no good effective way to do that. In blockchain, there is. And if you kind of choose the right one and then the applications come down the road, maybe it's going to be pretty hit or miss on the distributed applications that are going to be the long-term success, but you have a way to get capital gains effectively from picking the right underlying.
I think part of the reason for the maybe skepticism on some of the ICOs is where we are in this cycle. Like I don't know if anybody's read the technological revolutions in financial capital. If you haven't, it's a great book. But basically describes the cycle that every technological revolution goes through. Railroads, the internet, you name it. There is a technological revolution that is world changing. Capital flows after that. New technology, and the capital flows ahead of, the innovation. There's a bubble, there's a correction, and then meanwhile, the technology is evolving and getting deployed, and over time, it changes the world. I think that is what is clearly happening in this space, is that this is an amazing technological revolution. For the first time, you can send value between two parties anywhere in the world without a trusted intermediary, and then all the things you can do on top of that, and there's a lot of capital that sees that and is rushing into this space. There'll be bubbles, those bubbles will pop, but the underlying trend, kind of the long term where this goes, I think is also very clear, and I think that this does change the world and changes a lot of industries fundamentally.
We got to call Peter the professor, because that was great. That was super. I mean, I think, again, back to the utility aspect of it is, it's numbers, and I've given this, talk about it before, but what does exponential actually mean, right? And it's so beyond what human beings can right now kind of mentally get a picture of, because it happens so fast. And the blockchain is this, again, it's a utility for that extreme spike in advances in technology. It's going to help that, whereas the old way of doing things you wouldn't have been able to go so fast. Like you're trading on the floor, and one time they have chalkboards keeping the numbers, and then they have an electronic board keeping the numbers, and then you've got a handheld computer, and then there's no exchange anymore. And then so, the backbone for that, this is what the blockchain's creating, the backbone for this next evolution.
Okay, we got a few more minutes left. I'm going to go to a little bit less of an ICO and more of kind of a blockchain promise question, okay? And I don't want you all to pick the same one, all right? So I'm going to throw out some examples of industries that could be disrupted by blockchain solutions, and if you guys could kind of pick different ones, but some of them they list here are the financial services industry, healthcare industry, supply chain management, the real estate, property title, mortgage industry, Internet of Things, insurance, or anything you think of, like what is the low-hanging fruit? And give a little example of why that's so easy to disrupt.
These guys got to go first, otherwise I'll talk for an hour. So.
So the innovation in crypto is removing trusted intermediaries. So I look for places that you can't or people don't want to trust intermediaries. The best example I think is governments and banks in emerging markets. If you can remove the need to trust those intermediaries, I think that's a huge opportunity. So use cases in emerging markets, I think, is the biggest near-term use case.
I would second that. Remittances obviously would fall under that category as well, because this is the government side of it. In addition to kind of like there's the trust aspect to it, But there's also the decentralized part of a decentralized ledger, where if you have a lot of parties that need to be able to get information very quickly, sometimes there's just so much legacy that it's not a trust issue, it's just a matter of adoption. A good example is in the trading world, and I'm a one-trick pony up here. Clearing and settlement process, right? Like there are 10 parties that are involved in every single trade, and they all need to get on the same page and coordinate. But trying to find one person to do all of that is actually incredibly difficult, especially if you're shipping around paper and stuff like that. So that kind of financial services infrastructure is still being developed, but very ripe for disruption.
So, more from a human aspect is that as we advance individually in a society, there's always this amount of energy, whether, I don't have a empirical percentage on that, but so much of our energy is used to clean up other people's messes. And it would be really nice to be efficient if before you got involved with somebody, or, even in politics, you could say, I know more than the generals about ISIS. And somebody could go, well, let's ping the blockchain. I don't think you really do, and just save ourselves all this drama.
On that note, I'm going to put the questions to you guys, all right? So does anybody have questions they'd like to ask? And please say them loud, right there.
So, okay, in my case, for example, I'm going to start out with machine learning. So I have 4 ideas. The first one is 4th generation machine learning. One idea is an AI financial advisor with a defined framework. Third idea is data driven because I'm a quantitative analysis. 4th idea is going to be about an idea with Cornell University, Texas A&M University, and for a week I deal with the equivalent. Right now I'm doing my own salary, my wife's salary, funding all of these friends. So help me understand how can you help me to move fast, because I love speed. I understand the need to learn how to walk, or how to cradle, how to walk, and how to run. But I definitely would like to start running sooner than later. So help me understand each of you, how can you help me to get there?
My advice would be to focus. If you want to go quickly, do one thing, do it really well. Heard a bunch of ideas there. So that'd be my recommendation.
We are a team of 340 PhDs. So I know, I really compete in the world with many people at the same time. I agree with you, focus is important. I got you, Tony Robbins said focus, and I love that. And I love that point of view, and I love what you say about machine learning. But I also believe that by working together and building teams that are really highly effective, you can make also much more progress.
Any other questions?
Yeah, you kind of mentioned the ICO model and the token model compared to the security model. And I'm curious, do you see much consolidation happening in these ICOs that have already run out? And what will happen to the tokens if there is consolidation? Will some of these tokens wind up just going away then?
What do you mean by consolidation?
Well, some of these, essentially, companies either need to recapitalize in some way, get more money, and find it easier to merge together with similar kinds of technology that are out there. So you see a lot of ICOs that are very similar, whether it's in file sharing, blockchain for real estate titles, or even exchanges for that.
So is the question, are you asking the panel, are they anticipating that kind of consolidation, or are you already seeing it?
Well, what I'm asking is what do you think happens to a token holder that has no rights in that relative to a Reg D where you are an actual owner in the company? Could you have a situation where the token holder winds up with basically nothing at that point?
Peter?
Yeah, so short answer is yes. Slightly longer answer is it's completely unproven, like M&A for tokens, like acquiring a token network, that's effectively never happened, and I'm not even sure exactly how it could happen. So I think the end result, like protocols with tokens that don't take off, likely don't get acquired or anything like that. They just fall out of use. It's kind of like what happens, how does open source software die? It's just nobody is using it. And I think that that's what will happen to tokens. They won't have liquidity, and then effectively, yeah, it goes to zero.
Thought is you have an ICO, you've raised money, and you've built this protocol. How do you keep funding then so that you can keep maintaining that protocol and keep upgrading it?
That is a very strong issue with the ICO business model, especially for something that's a utility token that doesn't participate in future cash flows, right? So you do this one-time raise on the token, and most people aren't charging fees, or if they do, they haven't there's not like a real revenue model there. So it's like, here's a bunch of money in the door, and what I need to now support this network on an indefinite basis. It makes it very, very difficult. To Peter's issue, like merging tokens, like actual like you have a token. The token allows you to do one very specific thing. If you have another token, which is, it will allow you to do another related but also very specific thing. Like if you are going to try to hack the protocol so that it can do now both things, that's just a new token. So the only M&A you're really going to have there is going to be on the capital side, like the actual equity stack.
Okay, wait, I'm gonna have to cut us off.
Oh, yeah.
We can finish that conversation.
Why don't we take this offline? But